Welcome to Pioneer Mindset, a place where we challenge our mindset and address the discomfort in both business and life by finding clarity resulting in bold conviction. I'm your host, Garrett Ruskamp, fifth generation farmer, husband, and father from rural Nebraska. Whether you're navigating frustration from past decisions or worry about the uncertainty you face today in your business, we're going to learn from our struggles and take on new challenges with a resilient mindset. Join me as I share my journey of struggles I faced in agriculture as a farmer and family man. I'm ready to dive into honest conversations to tackle the mindsets surrounding key issues that rural ag business owners face that will ultimately help you gain control, leading to a profitable and sustainable business. Let's adapt to Pioneer Mindset and get to it. Welcome back, everyone. For this week's episode, I want to talk about something really exciting. Let's talk about tax planning. Now, before you skip on to the next episode or to somebody else's podcast, just hang in there. I realize that tax planning and talking about taxes is not very fun. It's not very sexy. It's not very cool. But guess what? It's part of our operation. It's a pretty crucial part. And quite honestly, it's like I said, because it's not fun, we generally pay somebody else to do it. But as we get into kind of the last half of this year, even the last half of this quarter for 2024, as you guys are going to be hearing this, it's important that we start to think about this as we get into December, which is kind of the big tax planning period or month as we get into trying to predict what do we need to do towards the end of the year for tax purposes. Now, for every farmer or business owner, I think this phrase holds true where we try to convince the banker that we made money, but then we also try to convince Uncle Sam that we didn't. And so I think this is always interesting to think about, especially from a farmer's perspective. Yeah, that's ultimately what we try to do. We sit in our banker's office and this is what we did good. This is the money that we made, the good decisions that we made. And then all of a sudden we get into our accountant's office and we're like, well, I think we spent quite a bit more than what we anticipated. And we didn't really make that much money, and trying to basically convince Uncle Sam that we don't need to pay that much taxes. So the thing that I want to talk about here is, like I said, tax planning as we get into basically that period into late half of December where we're going to be looking at doing some of these different things. So for you, what do you think about when I talk about tax planning? Now, every time I hear tax planning, and if you can't see this, obviously this is a podcast, I like to use quotations when I say tax planning because I think there's times where we can be proactive in tax planning, but most of the time I think we're actually reactive in tax planning. And that's why I really wanted to talk about this. And you're really not planning when it's done more at the end of the year and it's more of just a scramble. That's really not planning, in my opinion. And so that's why I think when it comes to tax planning, for me and kind of the way that I grew up and watching my dad or watching those close to you, it was basically what I said before, is it was a scramble. I think we watched as you get into, like I said, second, third, fourth week in December, maybe that week between Christmas and New Year's where, oh, hey, we should probably get a meeting booked with our accountant. And basically until you get that meeting booked, you're probably not going to think about it. For me, I think it's always the phrase is we have time. We have time? Well, we have time until we don't. And so I think there's usually, until we have there's a deadline where until we book that meeting with the accountant, we're probably not going to spend the time that we need focusing on this. Because going back to what I said before, it's not very fun. It's not very necessarily something we want to do. I think there's a lot more important things that we need to do is what we generally tell ourselves is we need to do some other things. We need to be focusing our time elsewhere until all of a sudden, like I mentioned before, it's after Christmas and we've got about 7 days, 5 business days generally in there, somewhere in there that we need to get this stuff all figured out, and it's crunch time, and then it's stressful, and it's just not very fun. And so then at that point, we are not tax planning. We are definitely being reactive and not proactive like we need to be in our business to stay on top of some of these things. So when it comes to being proactive and tax planning, the thing that I want you to think about here is the outcome or the results you get in the last half of the last month of the year are going to be dictated by your organization from the entire year to date. Now, what do I mean by that? Well, essentially, when we don't focus on this stuff, it can be really cumbersome, it can be really stressful, and it can be really exhausting to basically take the entire year and try to fix basically an entire year's worth of disorganization and gather up 11 plus months of records and put it all together. Now, let's face the truth. By the time you're hearing this, if you haven't stayed organized this year so far, it's probably too late. And I don't mean that in an insulting way. I'm just meaning that by the time this comes out, like I mentioned before, if you haven't stayed organized, this is going to be kind of a daunting task. But here's the thing. It might be too late to stay extremely organized on the year to date, but we can start to focus on next year. We can start now. Don't put this off until Christmas. Don't put this off until you absolutely have to and push comes to shove. We can start focusing on this now. Maybe that first week or two after you hear this, or the first week or two in December, that's when we can maybe start putting this stuff together. That way we're not trying to worry about this when we get into the holidays, when we're trying to focus on maybe being around family, or when the kids are home over Christmas break there. We're not trying to focus on this and making this a super stressful, super not fun event or experience about putting all of this information together when it comes to basically tax planning and trying to put all of your records together so you can take it to your accountant and figure out what you ultimately need to do. So that's why I think it's important for us to start now. And yes, some things could still change. And I think that's part of why we sometimes put this off until the last minute, is we're thinking, well, I might still sell some grain in December. I might still have some checks coming in. I might still need to book some chemicals or fertilizer for next year. Some things could still change and run through our account. But the odds are 95% of the business for this year is going to be done. And we need to keep track of everything that we have thus far. So we need to try to take on that challenge of basically getting after it and trying to get all of this stuff done, get everything recorded thus far, so that way we can have a majority of it done. So maybe you can take what you have into your accountant and plan from there. And from there, we can maybe try to predict what we have for the remaining of the year. Now, the other thing here is let's start thinking ahead, actually. And I'll kind of come back to some of the stuff that we can do currently. But as you sit today, whatever your system is, whatever you've done this year so far, if it hasn't worked, maybe let's start thinking ahead till next year. Let's start looking into systems that you can use in your operation that are going to work for you. And let's find a system that you can implement from day one. And I think this is something that I want to hit on here is let's not wait till day one of 2025 to implement something new or decide on what we're going to implement new for, say, a record-keeping system to keep track of everything, whether that be a QuickBooks or a different type of accounting system. Let's not wait till into January. Let's have this decision made. Let's have something that we can implement on day one so we can start fresh and we can start clean. Because if you don't implement that on day one, the odds are you won't. You're probably going to convince yourself that you're already behind, so don't take the time to actually catch up. And that's one thing that I think can really bite you in the rear end if you're not really worried about that ultimately. And so I think that if you're going to try to find a new system for you or try to look at trying to do things different within your operation to stay organized with your finances and to stay organized with a record-keeping system, let's try our best to start from day one. Now, circling back to the proactive side of tax planning. Now, what makes a good proactive tax plan? Well, the thing that I think about when it comes to being proactive is when it comes to taxes, especially, obviously we need to know the actuals, but we also need to know the projections. Now, accountants that are really reactive are really only going to care about the actuals. They're going to take everything that's been run through your account. They're going to take everything from, say, either your QuickBooks or your bank account, or maybe your spreadsheet or your chicken scratch on just some sort of ledger, whatever you have for a record-keeping system. They're going to take that and plug it into their system as the actuals. But now when it comes to having a proactive tax plan, that's when where obviously you need the actuals, but we also need to be focusing on the projections. Our projections are going to be something that we can actually keep us looking into the future. We know that this is everything that we've run through our account as the actuals. This is everything we have year to date. But let's actually focus on by using the projections to figure out what we have coming in the future. And the reason that we can do this and be really proactive is because we can start this whole tax planning conversation a lot earlier when we actually have good projections in place. Now, I think that's part of why I mentioned before, part of why people wait till the last minute to do this. They're like, well, I really don't know what we have coming in the future. Well, I think if we actually sat down and you tried to predict what you are projecting to take in the future, maybe for income or maybe for expenses, you can do your best to try to actually move this meeting up with your accountant to say maybe the end of November, or maybe a month sooner. So that way it gives you some time. It gives you some breathing room. Maybe you're not as stressed about it because you're not up against a deadline, up against a wall. You're not trying to cram all this in at the last minute at a less than ideal time, talking about being around the holidays and just times that some people don't necessarily want to be focusing on some of this very critical things for our business. Well, let's push that up to a more ideal time to be working with some of this stuff. And I think the good way to do that is by having projections in place, by being able to actually have projections that you can circle back to and be like, okay, as of year to date, maybe say end of November, these are my actuals. This is everything that's happened year to date. And I can take this in, but then I can also look at, okay, I sold some grain in November. The check's going to be coming in December. I know that I've got to prepay some expenses in December. My seed's going to be due December 1st. That's going to run through my account probably the first week in December. That's going to come through that month. And we can kind of predict some of these different things that are happening. And with that, with giving the projections to your accountant as well, they're going to get a really good picture as to what your taxes are going to look like. From that point, you're going to know, okay, maybe you need to go spend, $25,000, $30,000, get you where do you need to be for where you're happy with taxes. Or maybe you need to actually take in some income. Maybe you didn't sell as much because your marketing plan got kind of flip-flopped around a little bit. So maybe you need to actually take in some income. And from that, we can make arrangement from that as well. Maybe you had some grain that you had actually deferred. Well, maybe we can recapture that and actually take some of that income back in on this year's taxes. So it just gives us the breathing room to actually be proactive in everything that we're trying to do, because we all know what it's like. That last full week of business between, Christmas and New Year's, like I mentioned, is everybody stressed out because they're trying to do year-end things, they're trying to do this, that, and the other thing. And I feel like we're just trying to maybe not necessarily making the best decisions. You talk about selling equipment, that's always the best time of year to sell because people are trying to buy equipment for tax purposes. Well, if we know ahead of time, maybe we need to actually do some things. We're projecting that we need to actually spend money. So what can we spend money on that's going to be beneficial for our operation rather than just buying this thing that we didn't need to prove to Uncle Sam that we did not actually make that much money? And those, for business reasons, are not necessarily the best decisions that we can ever make, because we always look back and like, well, maybe we shouldn't have done that. Maybe we should not have made that purchase or made that decision. And so from a tax standpoint, when it comes to an overall business management, I think it can be fair to estimate that trying to prove to Uncle Sam that we did not make money just so we don't have to pay a little bit of taxes is usually not always going to work out for us. At some point or another, this is going to catch up to us. And I think this is where a lot of businesses can be in a world of hurt because they do not tax plan appropriately, because they go spend money on things that they do not need, and that ultimately could hurt them down the road. Yes, it might be something that could be beneficial, and we can always justify it to ourselves. That's the thing when it comes to any sort of equipment decision or any business decision like that. When it comes to buying something, is generally we can always justify it. But just because we can justify it does not mean it's going to be the best decision in the long run. And so that's why I think, especially if we can predict some of these things out, not to mention, if you want to be super proactive, we're going to take some of these actuals and projections that we've been talking about. Let's throw this into a really good cash flow projection. Let's look at actually next year already. Let's look at 2025. Look at what we're going to be doing then. Look at roughly what our marketing plan is going to be and kind of align it with that. Maybe this is the year that we need to actually take some of this income. Maybe we need to pay a few taxes. And that's the thing we get in our head, that we are not going to let Uncle Sam, we're not going to let somebody else take this money that we've worked so hard for. We do not want to pay taxes. Well, I'm like you. I don't like to pay taxes any more than you do. But at the same time, sometimes it's not a bad thing to be paying taxes because that means you made money. Generally, that means you are probably profitable. That's a somewhat good indicator that maybe you're actually doing all right, is if you're paying taxes. So I think we generally try to hide from the tax man as much as we can, try to find any loophole that we can. And I'm not saying that you shouldn't. I think that you should take full advantage of some of the different opportunities that are out there. But just because you have to pay taxes doesn't mean it's the end of the world. Let's not put ourselves and our business into jeopardy by making poor decisions just because we don't want to pay taxes. So I think that's part of being proactive, like I mentioned before. And I think in order to do that, we need to kind of circle this back around to where I started before I went on this tangent, is we need to focus on the actuals, but more importantly, we need to focus on the projections. Those are what's really going to help you be proactive in this tax plan. Now, as you put this all together, we talk about these actuals and projections. Now that I've mentioned this before, this is also going to help you be very beneficial in a business analysis. As in a business analysis, as in we can really try to analyze where our business is going to be into next year. And so this is going to be something that we can utilize, different software programs that are out there. I'm going to put a plug in right now for a tool that I utilize called Pharmametrics. If you want to learn more about that, please hit me up and how this can be beneficial for you. And like I mentioned before, try to find a system and that's going to work for you, that's going to be good for you and your operation, that's going to maybe take away some of the stress, take away the exhausting feeling that you have after spending an entire day in the office trying to play catch up from this last year. There are definitely programs out there that can help you do that. And I can definitely help you learn more about that if you are wanting to learn more. And so that's why I just wanted to, as I wrap this up, is as we get to looking at being proactive with our tax plan, this is also going to be, like I said, helpful with our business and how we analyze our business and how we operate throughout the year as we get into a really good system that's going to help us analyze our actuals and projections. We're actually going to be able to take that and use that for business analytics. Maybe use that to put forth into talking with your banker at the loan office when it comes to your renewal of your line of credit. So these are some things that can be more beneficial to you than you probably even know, and things that have more uses than just your taxes, than just the non-fun, non-sexy taxes. These are some things that can really help us in our business decisions when we stay organized within our business and focusing on our finances. So I hope you've stayed along. I hope you've followed along. I hope I did not bore you too much about talking about taxes, because even though it's not necessarily the funnest thing to talk about and to focus on, this is something that's extremely crucial for our operation. And it definitely, like I mentioned before, ties back to everything we do within our operation, within our business, and how we operate our business. So that's all I got for this one, and we will catch you next time. Thanks for tagging along with me today as we sharpened our mindsets. If you've gained insight from today's episode, be sure to take a screenshot to share or send this episode to somebody who might also find value in it. For more, follow me on Instagram @GarrettRuskamp or on Facebook, and join me next time for more conviction through clarity.